All right, some tech companies are emerging as crucial players during the coronavirus crisis. Businesses that have been able to connect people while we're all working from home seem to be doing quite well. Joining us now to discuss this is Daniel Newman of Futurum Research. Daniel, good to see you again. Thanks for being with us. Before we dive deeper into tech, I just want your take on this Wall Street Journal exclusive this morning about Apple. They're saying that Apple is going to have to delay mass production of its 2020 flagship iPhones because of the pandemic. How important is this to Apple's revenue, and what can we expect, if anything, materially to its bottom line?
Yeah, I think the immediate response of the street is going to be quite negative. Because when Apple delays stuff, you start thinking about launches, you start thinking about the big quarters that they cyclically have. They're fairly predictable for investors to be able to count on. I think the delay, if it means a better output in the end, a better outcome in the end, will end up being worthwhile. They did just release the new SE, which, given the economic circumstances that we have right now, maybe was as timely as the delay of the flagship will be as well. You know, we're going to come into a period where the economy's in tough shape. People might not be looking at $1,500 phones. So it may not be a terrible thing to let the recovery, whether that's U-shaped or V-shaped, happen before this next really expensive flagship iPhone comes out. But it's never good news. It's never good news, and it's certainly another artifact or an effect of this unfortunate pandemic we're dealing with.
You know, Dan, clearly there are some tech companies that are doing better than others during this crisis. To your mind, is there a particular sector that you like right now where you're seeing some opportunity for investors?
Yeah, I am bullish on tech as a whole. I mean, we've talked a lot about the work from home collaboration, so I'm going to skip past that one just because a lot of people have talked about whether that's Zoom, WebEx, Teams. But the cloud space, the infrastructure and scale cloud. So you're talking about, you know, people are already big on the Amazon, the AWS, they're big on Microsoft and Azure, but there's a few other players too. IBM, the enterprise cloud is going to see growth. You heard Oracle and Zoom actually made an announcement over the weekend and of a new partnership that's going on. So Oracle could see a little bit of a benefit there. Google, I like the cloud scale business because so many companies that have been quickly pulled into this. One of the biggest accelerators of COVID-19 is going to be digital transformation. A lot of companies were sort of limping along, adopting tech. I mean, look at how quickly you guys had to revamp your entire show to be able to do work from home. There was tech implications, there's capacity implications, there's software implications. And if companies are going to put their workforces at home, and a lot of them are going to probably stay this way for a period of time, this means more capacity. It means software that can run cloud natively. And that's what these big cloud players are doing. They're going to be able to support this, and they're going to be able to have to. And then, of course, as a byproduct of this, Alexis, you've got to secure it. So you'd see, you know, security players, Cisco, CrowdStrike, companies like that are going to be pretty exciting to watch. And then you're going to see things like SaaS. So Salesforce, you know, of course, they're already very strong, but you're going to see that kind of company because companies are going to go, we don't want to risk it. We don't want to have stuff on-prem. If all of a sudden we get sent home over the weekend, we need tools that we know can run and can scale. So it's going to be cloud, multi-cloud, hybrid cloud are all very exciting sectors and categories for people to look into.
Dan, I just had an article hit on Yahoo Finance looking at essentially this market rally for the S&P 500 is being driven by 5 big cap tech stocks, notably Microsoft and Amazon. I hear your points on the cloud, but do you think investors are just being too optimistic on these names? Is the rate of investment in cloud, is what I'm trying to get at, will it be at the same rate as it was last year, or will it slow down as companies essentially go out of business or worry about their CapEx spending?
That's a great question. We're going to find out a little bit this week because you're going to see earnings from Amazon and we're going to see earnings from Microsoft as well. The early AWS numbers are expected to come in strong, over 30%. Now, of course, that's smaller than their old numbers, but that's a law of large numbers as AWS approaches 10 billion, Brian. I expect Azure to also be strong. I do think your point, though, about some companies that are going to be hurt by this and going to not be able to pay their bills, they're going to have to get out of long-term contracts, they're going to have to suffer through trying to figure out the contracts they have with these cloud players. But I actually think because of the OpEx, right, the way cloud is subscribed to as opposed to big cap investments of former tech, right, when you buy big iron servers, data centers, this has been something that's been more endurable Companies are able to endure more successfully throughout the growth. So I'm optimistic that cloud will be one of the areas that will see a lot of rallies and growth, because you also have to remember companies like AWS, IBM, Microsoft, they serve the world's largest enterprises. And of course, some really big companies are going to get hurt. But between all the backstopping we have from the Fed right now, between the different, the CARES Act and the unlimited QE and the investments going on, these companies are really propped up. They're in a lot better shape than they should be. And as you mentioned, their stocks have barely taken a hit this year. In fact, some of them are above where they were when this whole mess started.
Hey, Daniel, what are your thoughts on chip stocks? I mean, they've been doing quite nicely, really holding up well. AMD, NVIDIA. We did see Apple say it plans to sell Macs with its own chips that it's going to produce starting in 2021. So how do you feel about chip stocks right now and then in the short term?
Yeah, I mean, chips, I said in the beginning of the year, I wrote a piece that I said chips will eat the world this year. And the reason I mean this is because the demand for everything, so whether it's cloud computing or the run that's gone on devices, you heard it's almost impossible to get a PC right now because of the demand for it, and that's all supported by chips. So AMD, Intel, NVIDIA today is closing its deal with Mellanox, so you're talking about a huge run and growth around high performance compute. So chips as a whole is going to be a necessity to support the growth in demand for cloud, the growth in demand for devices, the growth in demand for mobile devices, all supported by chips. And having said that, the Apple decision is really interesting. You've heard Microsoft last year went with an ARM variant of their Surface device, and now Apple's following suit. I don't think Apple is going to go 100% on their own right away. But they've always been interested in vertically integrating the top to bottom of the supply chain. And so if Apple can do it, I'm sure they're going to look at it. But I still feel Intel has really strong position. And by the way, as we've gotten early earnings, Intel's was good. It wasn't great. The removal of guidance after the next quarter, of course, unnerved investors, but the fact that it beat on earnings, it had strong revenue, and it was able to forecast ahead to the next quarter and say, besides a little bit of a margin hit as it updates its process technology, you hear the term 10 nanometer as it moves to its 10 nanometer technology. Overall, the company showed pretty well, and I think tech's shown pretty well. I reviewed IBM's earnings closely a week ago. I mean, as a whole, the tech industry is holding up pretty well. Having said that, Alexis, I will say the next quarter will be really key, the next wave of earnings, because the US impact of COVID really was only about a month of this earnings period that we're hearing about. The next quarter, it will be kind of in full effect. And I think that's when we're really going to see what the impact of this pandemic was on the tech industry.
Yeah, good point. We'll all be watching it very carefully. Daniel Newman of Futurum Research, great to see you. Thanks so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.